This is the Retail Trade Analysis Report for Manning, Iowa. The key retail indicators for Manning are actually pretty impressive. As we look at the top line here, we see the total taxable sales for 2011 and 2012, a 2.4 increase given the United States and the nation as far as retail sales is pretty substantial. The number of reporting firms, 87, no significant change there. Population, small change there. Average sales per firm, also an increase of 3%, and average sales per capita, 2.5%. In the top of this table, you'll see real sales in millions of dollars, and then on the bottom you'll see the actual reporting firms. But in the top, notice that we really didn't have a dip in the recession as what we would expect in most of the areas of Iowa as well as the nation. Notice that they've actually increased in sales. And so this is one of those cases where we actually have some winners and losers when we come out of a recession. Also down on the reporting firms, notice that we have also an increase in those sales. And I'm guessing that we'll probably notice that there have been some declines in smaller regional trade areas, and Manning has actually been the benefit of that retail trade area. In this chart, we see Manning as the red dotted line, and then we see the state of Iowa as the blue dotted line, and these are real sales per capita. So as we look at these 10 years, we see that Manning again has sort of been bucking the average as far as economic returns in retail and trade management. And so we see again there's not a big depression here. Actually, you can see the state of Iowa took a pretty good slump in 09 and 2010. And then it has had a steady increase of 2011 and 12. But in the case of Manning, you see they just kind of barreled right on through without even noticing the depression. The population trends for the peer cities, we see that Manning, and with the red line, they've done pretty well as far as maintaining their population. But when you see the blue dotted line, you see that the peer cities are really having a tough time in keeping up. Now, granted, the scale is probably only about 4% deviation from 100%, but it still goes to show that Manning has done a pretty good job of maintaining their population growth. This is one glimpse of the peer group for Manning. As you can see in Okoboji and Grettinger and Arnold's Park, in some of these locations they're pulling in a lot of outside retail, whereas Manning isn't able to do that. But they're still in a pretty good position as far as serving their own population, and we'll see that here in a minute. In the pull factor comparison with the peer group, we're talking about a break-even of 1, meaning folks that are serving less than 1, which Manning is just below 1 in the red, meaning that they're pretty much just serving their retail trade group. Those that are over 1, meaning that they're drawing in more people into Manning than what they have population for. And so that's where we get into the regional trade center once we get over 1. But this is pretty impressive for Manning to be this close and quite a bit ahead of their peer group. When we take a look at Manning as far as on the map, it's interesting to note that Carroll's about 30 minutes away. And they actually receive about 50% of their workforce in Carroll. Coon Rapids, again, is about 30 minutes. Audubon, same with Denison. Also kind of interesting to note that both Denison and Carroll have Walmarts and are considered the retail trade centers, which means all the more for Manning to make sure that they're serving those people in that probably about 30 minutes to 20-minute range of Manning, and make sure that they have all the retail products that they want. Bucking up against Carroll and Denison will be a little bit difficult, as there are a number of people that are going particularly to Carroll probably because of their workforce. But there's a real opportunity for Manning to provide even more of the retail trade.